Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time visiting this channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to refer your network to this channel, like, and make sure you're proactive, okay? In today's video, we shall talk about order flow and re-entry on 𝒓𝒐𝒕 and Forex synthetic market, good United States dollars. The reason why I emphasize on good or 𝒓𝒐𝒕 is because it's the highest paying asset, like it's the most volatile and lucrative asset. Okay, it's not that other assets are not so lucrative, but this is like this has the maximum. The silver USD could actually, present big profit on the first entry, but if you place the same trade on with gold and allow it to run long term and they follow the same direction, like they like allow it to reach the same target point, the same distance, you see that 𝒓USD, like once you place those trades on the same condition, the same lot size, you see that 𝒓USD is going to give you the highest profit in the long run. So we see silver tends to be more lucrative at short term, but in long term, gold is the highest. Even gold pay more than US oil. So that is it. That's why I use gold, so that for those gold billionaires and millionaires that are actually trying to actually make most of this market, you're gonna find this video very useful. So right now I'm going to show you something theoretical. We go to chart for practical, and right here I'll be dealing with market mode. Okay, so it's more of market mode at higher time frame. You are actually making a decision of where the market is heading to. So you're actually coming to the market as an observer, trying to gain knowledge and understand how the market think. Okay, so when you know what the market is thinking and deem it to be true, then you are going to follow that direction, right? And that become actually real, and like it becomes realizable at higher time frame. Okay, so this is the market. This is the market. This rectangle represents the market. Okay, both this market have chances of selling or buying. It has chances of selling or buying, but it cannot do both at the same time. You don't want to be trading ranging market. No, you must be focused. So and you can't just come and say the market will buy or the market will sell. No, you have to backtest the market. You have to run the analysis. You have to study the market. You have to go for fundamentals, go for sentiment, see what other information, get statistics about this asset, get statistics about the volatility, get statistics about the any news coming, get statistics about the sentiment, get statistics about new policies on the asset, get statistics about how other countries view that asset. Okay, when you know this, you go for technicals, do your technical analysis, combine with the fundamental to know whether you are selling or you are buying, but in the long term. So it should be from the higher time frame. You should be viewing the market at the yearly and the monthly, if possible the weekly time frame, to know what you are doing. All right, with this you stop trading anyhow, because immediately you get this idea, all right, you can now stack position. This is you reinvesting your previous profit and your capital, making more money along the way, because you actually like you are now a positional trader. You are now a positional trader. Now look at what I'm trying to say here. Let's assume that 𝒓USD create this waveform and then range and drop to where it started. Remember, it started at this level and drop, create, fake out, and start going up again. Take out this high in the weekly time frame and create a fake out to the downside, and then based on the bend theory, it's not supposed to continue going down, to go up again and then take out this high. Taking out this high is a sign of strength, and then create range. So what you need to do here is to believe that the previous bull action created by Xauusd is going to happen in future like 3 times, 4 times, 5 times, 10 times, because if a market is printing energy, if a market is energized in a given direction at higher time frame, it tends to maintain that direction infinitely. So the possibility is endless. 3 times, 4 times, 5 times, 10 times, you expect the market to move in this multiplicity. And what you need to do is to make sure you optimize your entry and keep reinvesting as the market creates strong support, because now you have made decision to buy. The same thing happens when the market is actually giving you a sell direction. So you have to do the opposite. Reinvesting at resistances, reselling at resistances, but you can't do this without a proper knowledge of loss sizing calculation, and these are available in our VIP, and maybe you go for mentorship or courses, you'll be able to have access to them. So make sure you do the needful. Right here, I'm going to shout for practical part of this. Right now, this is Xauusd. Okay, this is Xauusd. Why I don't want to put stop loss on this trade, if you have actually watched video on Band Theory, I think I was creating this video at the same time. So I don't want to place, I just want this market to trade at this price and trade above this price before I will know where I will place my stop loss. Don't do this on your own unless you have heavy equity. So that is it. Right now I will be in the monthly time frame. So we are talking about order flow. Okay, topic is order flow and re-entering on Xauusd and Forex synthetic market. And so right here you see that we are on the monthly time frame, but I really want to use the yearly time frame. But because you can just combine the months up to 12 months to get a year, so you can visualize it. Okay, so we have this sharp supply zone, but based on Band theory and energy distribution in the market, for the fact that this market performed this action, we don't expect it to just come and respect this supply. There is rise in volume here. You see this candle closing outside this supply. So that is a sign of strength. So the market pushes higher and pull back. Get rejected, created a bullish engulfing created a hammer, a bullish hammer. That is a sign of rise in volume again, and it now confirmed it by another much more rise in volume, like increase in volume in the market, taking out this high. Some people will be like, we are missing out and we wasted a lot of time missing out. You are not missing out, because the market is presenting an infinite opportunity for you, because since it is bullish, then you can get times 4 times 5 times 10 in this direction, because you see this thing at higher time frame, right? So what you need to do here is to look for, because you have to first of all believe on stability theory that this market is going to stabilize at this session. And what do? You go to lower time frame, not just much lower time frame. You go to the subsequent like a consecutive lower time frame. That is a time frame just lower than the monthly time frame, which is the weekly time frame. And you have to be here. Let's delete this. When you come here, let's go back in the future. I'm sorry, in the past, and then you will see the session we mark. This is the session we mark. Okay, so I'm looking for a very strong support in the weekly time frame, a level that rejects price as much as it can near the session we have chosen, right? The session we have chosen, and so we have this support level here. And you see that to confirm that this is a support, the volume spread characteristics of the market is in such a way that the sellers lost volume. They keep losing volume. You see the type of candles the sellers are getting in this market. So you have to know that the bullish action have to take place. Even with respect to a high sell volume. See this is a very high sell volume. But this sell volume is supposed to continue. But what happens is that the market start ranging. And then suddenly we see a spike in the buy action by this 𝒓𝒑𝒂𝒅𝒊𝒏𝒈 candle. That's a sign of strength. And so you have to buy, you have to enter buy action here. When you enter buy action here in the week, what do? You hold the trade. You go to daily time frame and optimize your entry and hold the trade until it reaches some levels where it will start changing, you are going to hold this trade long term, because this came from yearly and monthly time frame, right? So when you hold this trade, that's what we call season and regime. When brokers choose direction, they are specific. So when they choose a buy direction, like it is called regime and season. A season can take up to 100 years. A season can take up to 50 years. A regime can take up to 50 to 100 years. A season regime take up to, let's say, 10 to 100 years. Okay. So when they choose a buy action, don't expect it to be reversed after 2 years, after 3 years. No, it's never. So right here, when you place this trade, you are going to hold this market to this point. You just keep holding this market for no reason. Just keep holding this market, believing that it's going to be infinite in movement to that direction. And then when you do this, you look for re-entry. So there is order block here. So you are waiting for market to tap into this order block. Now, when markets tap into order block, you don't just enter markets like that. No, you wait for change of character. You wait for volume spread change in your favor. So you want to see buy volume rising. So we have buy volume here after it's tapped here. So you mark your target, it tap here, and then there is a rising volume, and then you wait for pullback. So this is where you're supposed to enter. You add more positions based on the current profit you have and your capital. You add more position. So you keep doing this. You follow the same strategy. You see that when gold reaches here, what happens? It reaches a maximum price and drop and create a support here. So what do? You add more position. So this is more of regime or season trading, even though it's not put in the topic. I didn't put regime or season in the topic, but when I say order flow, I'm actually talking about long term. So it becomes a regime and season, right? So you see how gold keep flying. Okay, but at certain point, if you're afraid, because you can't just be that rigid by the 48 laws of powers, you have to be like, you have to come to the market with certain fear. And what you need to do is, if you notice that you have made some substantial profit, you can lock some using a trading stop loss at regions where the market cannot be able to pull back. You know that at least when you get your first major move like this one that reach here, then you can trade your SL here. You can trade some of your SL here. You can trade your positions here, and then while hoping that no matter how the market pullback is not going to get there, and then you keep adding position. Why? Your lock position, you have locked those positions, but you are using some percentages to add more position, or you have locked in case if the market's trying to go against you or change regime, you will end up with starting profit. Because if you do not manage the risk and the market change regime and you lose everything, you are going to be faced with mental issues based on your financial progress. And so like you'll be affected emotionally and mentally, like basically, because you are here to make profit, and you have to achieve certain things financially, and so you have to be careful with risk management. Thank you, and bye for now.